Okay, so if you've seen our earlier video on importing data and preparing returns, then you're no doubt familiar with the fact that FilePoint supports a pre-return preparation analysis where you can look at the distribution and trace the jurisdictions, and you see all sorts of great information about the data that you brought in and what changed during the calculation and import routines. Now, after you've actually gone in and prepared some returns and advanced them from creation pending to some form of approval pending, at that point, you have reports that are available on a post-return preparation basis. And that's what we see down here on the bottom part of the menu when we're talking about reporting. Now, those reports include a great many categories, as you can see, one of which notably is this idea of imported data. And there you will see a lot of similar information to what we examined on a pre-return preparation basis, where we're looking for what did we import in summary, in detail, where did it go, what is the analysis, and so forth and so on. But this, of course, being done after the returns have actually been prepared. Having already spent some time in those in our other video, we're going to focus on a battery of reports here that are done on a post-return preparation basis, but speak more to return processing. And specifically, we're going to look at reconciliation, GL breakdown, on hold, and future filing. So I've gone ahead and I've run all four of these and spared you the agony of waiting for my Excel to open up here. And we're going to look at them each in turn. So firstly, we have this report that says what report it is, when it was created, for which tenant it pertains to, and of course, a tenant here again is a collection of one or more legal entities. Now, we can see that we brought some data in from a particular file, and it has a certain amount. There were some manual adjustments. Everything's date time stamped, which file did it come from, which user made the changes. Had we had any unresolved errors, we would see that. If we deleted anything, which wouldn't be a permanent deletion, but rather a deletion from this cycle, we wouldn't lose track of it. There's all sorts of reasons why we might want to do something like that. We would see that here, along with amounts coming in and out of hold, either because we're dealing with a credit situation and we don't want to file a negative return, or we're releasing a credit that for an offsetting liability so that we can net them, or we have amounts that are going into a future filing that's not yet due this period, or coming out of a hold like that because it is due this quarter or at the end of the year or whatever the case may be. Then we have adjustments, miscellaneous data entries, discounts, roundings, prepayments to the amount that finally is going out the door across all of our returns. So this view is called the summary portion of the reconciliation report, and with good reason. It's referencing all of the activity across all of the returns for this particular tenant, at least insofar as the returns that have been advanced to this point in time. Speaking of which, we've actually advanced 4 returns at this point: the DR100, which is of course the Colorado State return, an Avon local Colorado return, a return for Maine and Texas. And what's interesting about this is where the top part of this report is the summary view, the bottom part of the report is the detail view. So now we get to see those same adjustments here running across top for what was imported, held, waiting for future filing, adjustments, miscellaneous discounts, rounding, prepayments, all that stuff on a return by return basis. So all this activity is happening on a return by return basis to the amount that's finally going out the door on a return by return basis. And this is critically important because a lot of folks are under the false impression that when you're done preparing a return and you're getting ready to mail it, that your work is done for the compliance cycle. But in point of fact, these forensic level reports provide critical information so that you can account for everything that happened during the period. Speaking of which, we also have another report for GL reconciliation, and so we are capturing certain pieces of information about these returns as we're advancing them through the return preparation cycle, including capturing certain GL accounts for various activity. Notably, we're seeing the tax types here. GLS might be sales, CU might be consumers use, SU might be sellers use. We see the amounts due on a return by return basis, the payment methodology that we've set up in the system, and this of course could be used to create a check request. But more than that, we're also going to capture GL accounts for discounts and roundings, and be able to capture that back up to the GL to make sure that it ticks and ties to all the activity that happened as those returns were being advanced. And finally, we have the ability to map vendor codes to these returns as well. So if the Colorado or Colorado Department of Revenue has a certain vendor AP identifier in your payables system and you wanted to use that code, it would flow through to this report. Here again, giving you the ability to tap that code on your check request so that you know which account to hit when you're cutting that check. Now, briefly, I'll mention we have a bunch of activity that we've imported into the system that's not yet found its way onto a return because in this particular case, we have not advanced the New York return, and yet we've got New York data. We call this report waiting for future filing. So everything that's being imported in this period might be part of a monthly return due this period, or it might also be part of a quarterly return not yet due or an annual return not yet due. And this report would show you everything that has not yet been advanced to a return, potentially because that return is not yet due. And then finally, should you have credits and you're afraid that, for example, if you were to allow the credit to gross up, it would create an entire return that's negative and you don't want to file a negative return, you can shave off those credits, reduce them, hold them in abeyance indefinitely, net them against future liabilities, all within the FilePoint system. And FilePoint will track all of those credits for you. So long gone are the days of spreadsheets where you're having to do that manually. This spreadsheet, this report that we're looking at is the output of that functionality within FilePoint. So you can put the details of those hold credits or held credits out into a report and view it in Excel, but Excel no longer becomes the tool with which you track them. So as you can see, when we're dealing with FilePoint, we've got a very high degree of granularity on a pre-return basis when we're studying, all of the activity that happened during the import process, and we're able to perform all of those analytics and trace the distribution of various amounts. And then on a post-return preparation basis, we've got a full battery of, here again, forensic level reporting that's going to show us every adjustment, every rounding, discount, and capture them to our GL codes so that we can tie them back to our general ledger. And that is a brief overview of some of the reporting capabilities of FilePoint.